What's up, everybody? Hope you guys are doing well today.
What's up, Troy? That was some beautiful intro music.
Thank you so much. I smoked all those cigars. And
Do you,
so,
do you know who loved that intro music?
who?
The Bears.
Oh, man. Yeah,
The
Bears love
Bears
that intro.
loved it. As soon as you started playing that music, uh, you know, Big Red Candle.
Things start happening.
The Bears come out for Cigar Lounge, bro. I'm just saying they do.
It, it
I mean,
happens.
don't get freaked out, guys. It was like 2 points. I'm not trying to freak anybody out if you have a trade on. I'm just saying.
You talk about the
It
crash
might
of
have been
20,
coincidence.
the crash of 2024.
Well, there are people who say that the Bears, because they live in the bear cave, but there are people who would say, I've heard it said that they come out and dance for the Cigar Lounge intro music. I've just heard that said.
Listen, that would explain a lot because every time I've ever done anything musically, tried to listen to music while trading, um, I've lost a lot of money. So it's gone down in my account. So I can't listen
People,
to music.
this is unrehearsed. If you couldn't tell, people come here. I think not for the back tests.
Mm, yep, I agree. Speaking of back tests, we got some good ones today. So, welcome to the Cigar Lounge, everybody. Hope you guys are doing well. This is the second annual ever year to date show where we are going to go through trades and see what's happening year to date. It's been fun, to say the least. It's probably the worst time to ever start a year to date show as of right now because everything just goes up. But we'll show you. We'll show you. Stonks only go up, as they say. But before we do, I should tell you, options involve risks. They're not suitable for all investors. Everything we're going to be talking about today is backward looking and not forward looking. As always, consult with your financial advisor before engaging in any type of trading. Everything presented here today is for educational purposes. Educational when Matt talks, entertainment when I talk. With that being said, yeah, that's right. We'll play it again. At the end, I will play it one more time. I'm very proud of it, and I play it multiple times a day myself. So thank you
Troy
for
made the
asking that.
music. He recorded all the instruments himself.
I've got a fancier one for when we have guests, but when it's just Matt and I, we're going to get the trumpet song. Anyway, um, so I'm going to share my screen, and we're going to go through what has been going on in option land. So can everybody see my screen? Hit F5 to reply. Just kidding. I think you can just chat it in if you can see the screen. Matt, can you see the screen?
I can see it.
Okay, we're
If
good to
you can
go.
see the screen, what would also be good is if you smash that subscribe button and hit
Ooh,
like to
yeah,
this
yeah,
video.
definitely. We were just talking about this earlier. I always forget to say smash that subscribe and like button.
Yeah, and it's important that you smash the button rather than just hit the button, I
Don't be
think.
one of those guys that just gently, hits it. So anyway, all right, here we go. We're going to go through, and what we're going to do, as you can see, is in my beautiful organization. Last week's trades don't have the preface week two. This week's trades do. We're going to go through all of them and see how we're doing. Starting out, last week we had the great 14,000 or 14 million MAR. If you remember this trade, open the trade right in the morning on any gap down, right? Let's see how we've done year to date so far. We're going to rerun it. Hasn't done anything. Tell me why. Any watchers? Can you see why it wouldn't have done anything? And this really sets the tone for this week in some ways.
I'm guessing one of the conditions wasn't met.
You would be correct. And
It's a hint.
what is the condition? That's right. And the gap I'm doing is anything. Literally, if there's a gap down, open this trade. And we have not, because since last Thursday, we have not opened down, I believe one time. Correct me if I'm wrong, but it's crazy. So that one's an easy one. We'll just keep monitoring it week by week. Let's keep going. The other big winner last week, sell a put spread. This one is tranching a little bit, randomized times. Let's see how we did year to date. Uh-oh. Rut-row. Looks like we got ourselves a little drawdown. Still profitable trade, but we took back some of those profits last week. If you want me to share these tests, I can as well.
I think they're all in the Cigar Lounge already.
Perfect.
I think
Okay.
they're all in the Discord server. If you're not on the Discord server, you can go to optionomega.com, click the Discord server,
Smash that Discord server button. Okay.
smash it.
We'll keep going then. I will definitely share the new ones. We've got a new one here, but I'm gonna save that. So let's go back through all the ones we did last week first. Sell a put spread. Same type of thing. Did I just do this one? I had one that was very similar. Let's see.
No, you did a different put spread, I
Okay.
believe.
Oh, I did, didn't I?
Rut-row.
Rut-row. It looks like 3 times a day selling the 50 delta 25 wide put spread is not working. Not working. So maybe back to the drawing board on that one. That's okay. Let's go buy the dip. This one's pretty straightforward. Anytime move down 5 points, if there's a move down, we're going to we're going to buy the dip via selling. Let's see
Yeah,
how
and
we
so
do.
unlike the gap down, which we haven't been seeing,
Yeah, this is intraday.
yeah, we definitely should be seeing some move downs. Wow, Troy.
Yeah, that one
What is
continues.
happening?
We're gonna save it. We're gonna save it.
The PPT is out in force this year.
That's right. Buy the dip via selling options. So that one, I'm gonna share it just because that's a winner so far this year. We'll keep it going. Last one. This one's going to be similar because I annualized this one to show you that that trade actually kind of worked. I bet we're not going to have any other trades on this though, because it's the same as the first one. Yep, exactly. Okay, so now let's get into week 2. As a primer, if you have an options trade that you want to look at that's been working here today and you want us to talk through it on the old show, just send it over, put it in the Discord, email us, whatever you want to do. Easier on Discord. So do that. Let's go to week 2 now. Some new stuff. We'll start with the first one. I'm going to share it. Let you guys open that up there real quick for those who are following along in the chats. What we got here? This is a call butterfly, and we're doing it first thing in the morning. We're buying a 50 delta. We're selling. This is a ratio, so we're buying 1. We're selling 3, and we're buying 2. So 50 points away by the call. 15 points beyond that, sell 3. 50 points beyond the first one, we're buying 2. We've got some exit conditions: 100%, 200, or 100, 500,000, 2,000. And reminder, let me add profit target to this real quick and rerun it. There you go, a little bit worse, but anyway, so as you can see, that one does pretty well. Now, before I show you the trade log, why would a ratio do pretty well? What am I doing with that ratio? Why sell 3 of them instead of 2 of them? Any takers? When you buy a butterfly, is that a credit or a debit? A standard butterfly. It's usually a debit, right? Well, in this one, it is a debit on some of them, but the way we've structured it, it's you also a lot of times are receiving a credit. So it's very low debit, very low credit spread. And so with that, obviously, if you have a blowout to the upside, you could get hurt, but it probably won't. With 1 day out, putting it on in the morning, the idea with those exit conditions is you can kind of leg out as it's going up. The one obviously risk of that would be a huge overnight gap, but we haven't had that yet this year.
Yeah, and something we've been talking about this, just kind of chopping it up. I'd be interested to see if anybody else feels like there's a lot more 1 DTE backtesting going on in option Omega land. Seems like some of the 0 DTE backtests have turned into 1 DTE backtests and are kind of I mean, this is nothing that other people haven't commented on as well, but it seems like part of the reason for that is just 0 DTE credit selling it's been tough sledding for a little while. And when your 0 day realized vol is higher than your 0 day implied vol, or your 0 day credit really is what matters, that the 1 DT makes for a little bit, still might be rough sledding, but the hills are a little bit gentler. And I'm curious if anybody in here has shifted some of their 0 DT action to 1 DT, or even longer maybe.
Yeah,
But
put it
if
in the
you
chat.
have, put it
We'll
put
keep
it in the chat.
put in the old chat. I mean, here's one thing. I was talking to someone a while back who was asking about 0 day selling and saying, has 0 day lost its edge? And the way I put that is, it depends on what you think your edge was before. Because 0 day itself, I don't think is an edge. That's might be a controversial statement, but I don't think 0 day itself is an
Yes.
edge. I think probably, this is my guess, the edge, if you had a really good 0 day career previously to 2024, it's probably the edge that's gone is a VIX above 15, right? I mean, we're in a pretty low historic VIX environment. It can go lower for sure, but this is pretty uh, low. So we'll go from there. Let's keep going. Where was I? Where was I? Okay, so that's the call butterfly. Here's a variation of that. Put it in the chat. This is let's ask some questions. I'll get to that in just a second.
These are good questions and good commentary, by the way.
This is a call butterfly when there's an intraday move of down of 10 points. So same idea as before, but we're doing it when there's a little bit of a drop, right? That's the only difference, is the move down in 10. And as you can see, that's done quite well. Again, I said this last week. The point of doing this every week is we will get much more data every week, and so that's by the end of the year we should have a good list of candidates for trades of the year. Is the idea. 7 trades. Does that give you a lot of confidence? It probably shouldn't, but that's the fun of doing this year to what's working year to date, and in these sessions that has worked year to date. So. Since IV is such a large impact, could some year-to-date variability be due in part to very low IV premium? If so, might we want to routinely enter a VIX rate and or backtest? For sure. Yeah, that's a great point, Mike. The thing, especially with this type of situation, I mean, this is in your trading, you should go further back than year to date. This is the premise of just showing what's working year to date. I don't do that yet. We will definitely be putting VIX stuff in as the year goes on, but we don't do that yet because I can tell you what VIX is. We've been trading 3 weeks. I know what the VIX is, and so I'm not doing that. But once we have a VIX breakout or break below, we will definitely start seeing some trades where that matters a lot more.
Yeah, and the VIX I mean, here's where the VIX is low, like not
Yeah, it's low.
super low, but it's kind of low.
Hmm.
Mike, I think to your point, I think it's super, super common. We don't track metrics or scan tests or anything like this, so I can't tell you how many tests have a VIX condition. But anecdotally, I use VIX conditions on a lot of tests. A lot of people use VIX conditions a lot of tests, especially for testing something that has a longer period of time that actually has VIX conditions. Right now, for the first 20 trading days or 15 trading days, however many we've had this year, it's all been sub 15, 16. What are we at right now? 13, 13 and a half.
Well, it's
Low,
crashing. It's crashing right
low,
now, right?
low dog.
Um, okay. Next trade. This one's a new one. This one's interesting. Wanted to go into the end of day, the opening range breakout feature. See
Nice.
if we had anything. So this is an end of day range. I talked about this before, but you can set the opening range to anything. So in this case, I'm setting it 9:30 to 3, and basically anytime between 3 and 3:15, if we break out of the range we've been in all day, I'm simply going to buy a 1 day call. Uh, Again, such a low data set, but with the same profit target as before with the butterfly. As you can see, that has worked pretty well. It's interesting just to show you what happens if we take off the profit and we just let it ride.
Hmm.
Notice the same thing. They just
One
expire.
one really big winner.
Right,
That's what you
exactly.
notice. One day
Exactly.
that you wish you would have put it on. Oh, it was a week ago. I remember that day.
That's exactly right. So let's do this. Let's keep going. You could also use that to test some put selling strategies too. So if you have that test I just shared, you might want to play around with, instead of a buying and call, maybe you do the butterfly there, or maybe you sell the put there, or something like that. That's something you can play around with.
Yeah, and just to shout out, if you're not familiar with ORB, we released this not that long ago. It's been weeks, I think, not months. It's the opening range breakout, and it's a new feature in Option Omega that people actually started asking about pretty early on. We weren't really super aware of it, and then we just kind of got a steady drip of people asking for it. And Troy did a whole there's a whole YouTube video on it if you just want to look at ORB strats, and there's some great work on the Discord. I feel like it's Steven. Shout out to Steven V on the Discord for a thread on ORB. Again, hop on the Discord, smash that
Love it.
Discord button.
Mm. Okay,
Mm.
I'm going to skip this one because it's ridiculous. I'm going to show you one that makes sense, and then to show you how ridiculous this market is, another one that doesn't make sense. So this is the opening range breakout, but instead of 3 o'clock, it's a classic kind of uh, uh, classic opening range. So it's 9:30 to 10:30, and basically on a break of the low, so a breakout of the 9:30 to 10:30 to range, we're going to sell a condor, but the condor is weighted, so it's 50 delta put side, 25 delta call side, 25 points wide, and you're doing that obviously the higher delta because you want a little bit of range. You want a little bit of range to the upside, right? And you're going to take profit. And so this is kind of a fade. It's kind of a move that you kind of go up a little bit, take your profit, set a straw. But it's a way to get into a condor, a 0 day condor, instead of just centering them, waiting for some action. Right now, we're in an extremely bullish environment, and so a lot of times you're just going to drift higher on that breakout. You're not going to see any follow through. Uh, Lord willing, later this year, at some point, we will. But right now, we haven't. In fact, today might be the day. I mean, it broke out of the range, and it went from there. So um, let me see if I can. I'm going to get fancy with you for a second. Are you still seeing the option Omega screen?
Yes, we still see
Okay,
the back test. Yep.
okay. Hold on 1 second. I'm going to show you this. Okay. Can you see a bunch of numbers, fancy charts, and things like that?
Blue crayons.
Okay, so this is a market profile chart. Each letter represents 30 minutes of today's session. So A is the opening letter, 9:30 to 10. B is 10 to 10:30. So what does an opening range breakout mean? It means basically at this A right here on the MES at least, that would be the breakout, right? Um, Here to the upside, B would be the breakout. If that chart confuses you, don't worry about it. Anyway, I just wanted to show you that real quick. So back to regularly scheduled programming. So that's on the low touch. Obviously, it makes sense, right? We haven't had a lot of days that it doesn't revert back up. But here's where it gets crazy in my mind and ridiculous. Um, that is, let me do this. That was the low touch. This is the same thing, but it's when the market goes up 10 points. I would not, this is crazy to me because I would never do this in real life, but it just kind of shows you what the market, how strong the market's been. Is when you have a move up 10 points, sell a heavily weighted put spread, right? Up. And it's still working. So take with that what you will, but it's crazy to me. We'll keep going. So, two more. This is what you would think would work is you sell a put spread on a 10-point move down. So if we go down 10 points, sell the 50 delta, 25 point wide. And again, I give you these ideas. You can play with this all day long and see what works better. You know, I'm not running 1,000 permutations of this. So, uh, you know, that works pretty well. You know, you could try different things. You could do 25 delta. Yeah. You're not taking much chance on that, you know. But anyway, so that gives you an idea. High MAR with very low trades scares me, but that's where we're at. We're only in week 2. Okay. Last one. Last one. Share this for you. Okay. So this is a 50 delta fly, and this has got some variables in it. So it's an opening range breakout trade. It's only Monday, Thursday, and Friday. 10% of your portfolio, so a very low percentage of your portfolio being used. And here's the little juice of it above the 3-day SMA, simple moving average, and it's a break of the high. So you're buying a 50 delta, right? You're selling 40 points above that, and you're buying 80 points above that initial ball. So it's a debit. It's a pretty high debit, but you're just letting it ride. And because we just go up every day. This is what we do. It just works. I look forward to the day when it doesn't work, and then we'll have a lot more data, and we can start looking at some other fun ideas. But for right now, we're in the market environment that everything. If you just buy stuff and sell puts, it's working until it doesn't, right? And so that's right, Robo. And 4 trades. I mean, you get 4.
Yeah.
What are you gonna do?
So something else too, just I think everybody on this stream knows this, but the portfolio allocations will vary. And a lot of times the portfolio allocations in the backtest are comparing backtest to other backtests. None of the portfolio allocations, obviously, we're just sharing backtests here. None of them are recommendations. There's just an idea generator, but especially with the portfolio allocation, if you're refining this, we would encourage you to just try all different sorts of allocations. When you run something at 100% allocation, that is something, again, we're not making recommendations, but people you don't usually trade 100% allocations. What it can do, and the reason why it's useful to run 100% or a higher allocation than you trade, is allows you to feel the drawdowns and see the drawdowns. So if you have a trade that you back testing and you put it on at a 2% allocation, it might be valuable for you to run that at a higher allocation than 2%, something much higher, and it might cause you to feel the drawdowns and think about the trade in a different manner.
Yep, that's good advice. Um, so yeah, anyway, that works, for 4 trades. So as always, what are the takeaways from week 2 here? The market just continues to go up. Fading the market at your own peril, unless you're fading the down move. That's what's happening so far. But those days can't last forever. It could last for a year, might last for 2 years, but it can't last forever. And so, as always, we will come next week with a lot more data, 7 more days of trading, 5 more days of trading at least. So, with that being said, any questions before we hop off for today? I love Monte Carlo simulation, Christoph. Big fan of that. For those who love Monte Carlo simulation and like reading, Fooled by Randomness by Nissim Taleb. It's got some fun Monte Carlo stuff in there. I appreciate it, Mike. Yeah, it is a mental challenge for sure. You can have the winner. This is the thing I see all the time. You see someone who has a trade, and let's say it's a 90% win rate, and the losers are going to be bigger than the winners just because a 90% win rate trade usually does. You can love the idea that you're going to win 90%, but what happens when you lose 2 times in a row? I've seen so many traders go on tilt because the statistics, they're at their max and they have the huge drawdown. Vice versa, you could have a low win rate trade with a high return. Can you stomach losing 5, 6, 7, 10 trades in a row? A lot of traders back out and they're like, this isn't worth it, So know thyself, know the type of trader you are, and that is the key to surviving in the game. So that being said, Matt, do you have any other questions?
Nope. Everybody stay safe on the roads.
Yep.
Keep it between the ditches.
Order more diapers, as Mr. Bill says. I agree with that.
Oh my
My adult pamper trader diapers, and
gosh.
go from there.
Thanks for that,
So
Bill. Thanks for that
with that
image.
with that being said, I will on the way out give the people what they want. So for those who want it, have a great week, and we will talk to you soon.